Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. And in this video, we're going to be taking a look at the week ahead for Bitcoin and also for Ethereum. I have with me a very experienced trader. So he's going to be teaching me, and hopefully this is something we're going to be doing on a regular basis. To find the best cryptocurrency investments, check out Token Metrics. Use my affiliate link for a discount. Also, please follow me on bittube.video. You can also follow me on Odyssey. These are both censorship-resistant platforms, and every now and then I am going to post a video which isn't going to be on YouTube. Hey Steve, good morning, or good evening for you. Thank you so much for making yourself available.
No, thank you so much for having me, Rich.
You're so welcome. And we're going to go a little bit into your background and why you and I are going to be looking at the Bitcoin and ETH charts. But you're also one of the co-founders of Vyfinance. Do you want to say a little bit about that?
Oh yeah, we're an upcoming project on the Cardano blockchain. We're kind of a bit of our own thing. We're mixing the concepts of a DEX, which is a decentralized exchange, with the concepts of a liquidity aggregator, which is essentially someone that helps you interact with DeFi on your behalf, to create a bit of our own thing. I'm sure the links will be down below, so check out down below to have a look at our project.
Yes. And you will be back on the channel, and hopefully we'll do some videos about Vyfinance. And for those of you that are Cardano holders, what this means is applications are coming to the Cardano blockchain at long last. They are coming.
That is correct.
All right. Now, you've also got a background in trading. Do you want to say a little bit about that? What sort of trading you've done?
Yeah, absolutely. So I began my trading career as a short-term interest rates trader, so STIRS markets. These are looking at the front end of the treasury notes, which is essentially how Treasury prints money. It's like the 1 month or 1 day to 1 month dated bonds that you can buy off them, all the way through to 10-year government bonds. And that was dealing with Australian government treasuries, American government treasuries, and British government treasuries. And I also think I traded Bundeslush, which is the Germans ones. From there, I moved into financial. Well, I worked in a bank from there, working in financial advisory and what's called superannuation in Australia, which is our retirement pension funds, and working within the advisory sector there. And that was looking at investments. And then from there, I began. Look, actually, I had a 1-year interregnum where I went to go apply my mathematics inside logistics. And then from that, I decided, you know what, I'm going to go do this all for myself. And I began my own, I just started trading and began my own project in crypto.
Fabulous. And you've got experience and expertise in trading and background in trading and finance, unlike me, because I wouldn't trade off my own signals. And I'm not recommending
I wouldn't trade off mine either.
Either, right? So this is just for information, educational purposes.
Yes,
but
not financial
everybody knows. Everybody wants to know what's happening with Bitcoin, what's happening with ETH. Has the bull run resumed? Where's the price going to go next? So do you want to start by sharing your screen, and we'll have a look at whichever one you want to have a look at first?
Oh, there's so many ones to look at. Yes, let's begin by sharing my screen. Let's start by looking at Bitcoin, and we're just going to look at a direct analysis of Bitcoin. That's the chart proper. Is this my? Oh yes, look at that. I got rid of 2 indicators to make it a little bit clearer for us. How nice of me. So I don't have anything complex going on here, right? I don't want to hit you guys with a high.
Sorry, Stephen. Can you move the price chart nearer the candles and stuff? And now we can do that.
Like that. Do you want it like that? So with a bit of a wider range.
That's better. Yeah.
Okay, beautiful. So here we don't have anything too complex going on. I've just got some fibs down, and this is a long time range fib. So this is going from the top of this range to the top of all-time high to the bottom of the local range that we've had. I'm actually going a little bit below the bottom of the local range. And the reason I'm going a little bit below the bottom of the local range is because I do want to take this price information here from the back end of where we took off. Now, we've got a 3MA. So that's a moving average. And a moving average cross. Have you spoken about moving average before, Rich?
No. No, I don't teach anybody anything. I just look at sticks.
Beautiful. Well, look, moving average is really simple. It's just a sum up of the average open, high, low, and close of the last X number of candles, right? So here we're doing it based off the closed, and we're doing 6, 11, and 18. Now, I actually do want to adjust my 18 candle up to a 21, just because it should be a little longer. I do apologize about that. Now, these just track the average price. So they're what's called a lagging indicator. They're looking at price history in the past. So whilst they're looking at price history in the past, you can use them to give you strength signals for where the past price history has been looking more bullish or more bearish. Now, one of the things that we'll see preceded this big jump is one of the big things that you'll hear other traders talk about, which are what are called bull crosses or bear crosses. And that's when you have your moving average, these, and these cross, either do an upwards cross, which is a bull cross, or a downwards cross, which is a bear cross. And it works by having the shorter ones crossing the longer one. So yellow is my longest here. We can see that I'm going to zoom all the way in to these, to where it crossed. Here we can see my shortest is blue and my middle is green. The shorter you are, the closer you hug the candles. So my shorter one crossed my yellow first, and it crossed my yellow on this candle. There was a reaction from my shorter one crossing my yellow. That pushes up the next candle. But that push up of the next candle gave us a medium to a long cross. So we had a bull cross on the medium to the long MA. And then this is where all bedlam went, and we just started pumping. And you can see how it occurred straight after the crosses took place. That's when, after we got the second cross confirmation, boom, we punched. Now, the big question is, of course, these are lagging indicators. So it's a lot easier to look at these and say retrospectively, oh, look, that happened. It's when you read them in the present where you try to gain information from that it becomes a little bit more complex. But right now, we're not looking like we're heading towards any cross. But we had these big moving average crosses that took place, and it also lined up with a bull cross on our MACD, right? RSI was pretty low, and then we also had a bit of fundamentals that came in with Taproot. With GBTC. That created a bit of a supply shock. Now we're doing currently. You don't talk about Elliott Waves, do you?
No.
No. So I'm not going to go to a full description of Elliott Waves, because that would just be too long for the purposes of this video. But essentially, Elliott Waves are the idea that the market moves up and down in predictable motions. Those motions are, and this is just the theory, don't ask me why this is the case, those motions are 5 strokes in an upwards direction for a move, and then 3 strokes back down as the correction of that move. Now, when you sum up these sets of 5 strokes and 3 strokes, back down, and then back up, and then back down, you get a set of market motions. Here is the current upward stroke in the wave that we've just had, right? Now, this is my expected target, and this isn't my extension target. This is just my initial expected target, somewhere between 45 and 47, right? And this would just complete this nice, easy motion, wherein we're looking now at the retracement of either taking us basically to this line here. Either we're not going to drop below the 42.3, right? And if we do drop below the 42.3, I don't expect us to go much lower than 40,000, right? And then this would be the launch pad for us to be able to push ourselves through. This is the buy up zone, right? This is where we undergo consolidation, and then we push ourselves through into the next Fibonacci band, right? Mm-hmm. So that is my most expected scenario to be taking place. Now, if we can get a nice hold into this zone, right, and fundamentals keep coming in our favor, I don't think it is unlikely that we might see ourselves begin a new upwards motion, which takes us up between the 50 to 55 zone. But we need to wait on more information before we can really talk about that.
Okay,
at least
very cool.
On a top
very
level.
Cool. Do you want to look at ETH?
Yeah. ETH, I actually don't think is an interesting market right now. We're looking really overbought. But the reality is that we're being pushed right now by fundamentals, right? ETH has just changed to a chain that burns rather than a chain that mints. And that's all in EIP 1556, 59.
1559.
I always mess that up. EIP 1559. There's been so many now. Now, because of as a result of that, we're seeing a supply shock take place, right? So a lot of this motion that you're seeing here is actually a pure result of supply-demand curve. And if you've ever looked at supply-demand curve, you reduce supply, you move yourself up along the curve, and that increases the price until the price meets equilibrium with supply, right?
Yep.
Now, that means that this motion is a fundamental motion, right? I couldn't have sat down and said to myself, oh, there's a nice pretty chart. This is going to go kaboom to heaven. You probably could have by looking at the rest of the market and a whole other few factors and with a bit of luck. But essentially, this motion is a fundamental motion. What I'm finding really interesting is that, and I want to hear, what's your opinion on EIP 1559?
Well, I think in the long term, it's definitely bullish. Definitely bullish, because there's so many applications on on Ethereum, and with a little bit of Ethereum being burnt with every transaction, it's going to reduce the supply of Ethereum.
Do you understand how that's going to be shifting when they implement the staking mechanisms?
No, that I haven't considered.
So once they implement, so essentially this burn is designed to repay the holders of Ethereum who have spent a lot of money doing transactions on Ethereum for the last X period of time, right? And that's why the miners were very, very against this being implemented, which, to be fair, they should be pretty against it. They lose a lot of money. Now, this burn is going to stop, right? And then this network is going to move to a proof of stake network, wherein they're still going to be producing Ethereum, but instead now it's going to be held by stakers. And the stakers of that network get distributed that Ethereum. You can think of it like ADA, right? Like ADA. Now, once we engage in a proof of stake system, we're now going to start minting Ethereum again. So that's not going to be a forever process, that burn. Secondly, what I'm worried about is the scalability of EIP 1559. It doesn't really solve the fee issue as much as they were hoping it would. I believe they will increase the limit to 10,000 transactions, but most of the time don't hold me to that number. It's not going to be as scaled as everyone was hoping it was going to be. For example, Cardano is going to be significantly more scaled, where we can do 1 million transactions at a time, right? Ethereum isn't going to be able to reach that sort of level of scalability. So whilst there are a lot of platforms on it, I still don't think it solves the long-term issues that are presented to the blockchain, essentially. But again, that's my opinion.
Right. Okay. Very good. Very good. And we will be covering that because I don't know much about Cardano. I do hold some Cardano, which I bought some time ago, so I've done very well with it. But we can cover that when we speak again about Vyfinance and why you've chosen Cardano over Ethereum, although it's not to work out. Do you want to say a little bit more about where you think the Ethereum price is likely to go over the next few days or so?
Yeah, absolutely. Look, at the moment, actually, also, I should add, and if you could show this below, in our Vyfinance group, we've got a trading education channel. And I, as well as a few others, on there regularly talking about all of this stuff. So please swing on in and feel free to ask any questions or just listen into conversation and, learn along.
I'll have that link in the description below. And Stephen, do you want to move the price closer to the chart again?
Of course.
Just a bit away.
Yeah, of course. Sorry, force a habit. I like
the daily chart and the 6, 18, and 21 EMA. Sorry, moving averages.
Yes, let me just change this one to the 21 again because this one is auto changed back to the 18. 21, we want that.
No, not 18.
Also wrote 18, 21. Yeah, of course, 21. There we are. This isn't showing us much. This had a replication of the triple MA cross, right? But that was pretty much seen across the market. Here we've got the fundamental move. So we basically just had one single motion, and you can see that one single motion in almost a straight line without retracement, right? That's why I don't really feel comfortable putting down I don't really want to be putting down Elliott Waves just yet because I don't think we've had enough information from this wave as of yet to be able to gauge where exactly those motions are looking. Of course, many TA-inistas will disagree with me, but look, we're all entitled to our opinion.
Aren't those daily red candles, aren't they a wave down? Aren't they a correction wave?
Yeah, they could be a correction wave down, unless this candle closes up here and then we basically hasn't been a correction at all. It might have just been like a single day volume flow and then we're back on our straight line. I don't really like an Elliott wave that looks like this.
Yeah, to me, correction.
That's not an Elliott wave. To me, an Elliott wave is.
Yep.
That's an Elliott wave, right? So I still want to look out for a little bit more information. We can draw some more interesting lines on lower time frames, but we don't have time to do everything here in this video, unfortunately. I would say that the targets that we're looking for as this burn continues is likely. At least we're hoping we're likely going to be breaking through here and then holding within this range, right?
What are those prices? Because I can't see them.
Yes, of course. 3,000, 3,300.
Okay.
So 3,000 to 3,300. And I would say right now, for example, is looking like a pretty good moment to get long, not financial advice. Because I also think it's very possible that if this burn mixed with hype continues, right, and we see the rest of the market continue on its current bullish trend, we could see ourselves breaking through and maybe even punching through towards the all-time high. Remember, right now we've got less Ethereum in circulation than we had at this point here. Not yet. It'll still be a couple of weeks. But by the time we reach around this point, we're going to have less Ethereum and I mean this point in the white, right? We're going to have less Ethereum in circulation than we had around here, right? So we'd need to hold a smaller value now to be able to hold this level, right?
Right.
So as a result of that, I see these price ranges being very possible to be covered again on Ethereum in the immediate future, more likely 3,000 to 3,300 most immediately, and then would be looking to see if we can break the 3,300 to get towards the 3,500 as our sort of next step.
Very cool. Very cool. Okay.
All good news, really.
Yes, it is all good news. if you're an Ethereum and Bitcoin holder. And I'm sure it's going to be good news if you're a Cardano holder. And perhaps in one of our subsequent videos, we'll look at some TA for Cardano.
Well, the only other one that I wanted to talk about briefly was the Ethereum Bitcoin spread. I feel like this is the most underlooked at chart in the market, as well as BTC USD minus Ethereum USD, right? So this is the minus chart. This is the divided chart. Now, when we're looking at this market, right, this market represents what's called relative value, and that's the value between the two assets, right? So how much is one Ethereum worth in Bitcoin? How much is one Bitcoin worth in Ethereum? Now, you also need to remember that the classic correlation between Bitcoin and most other crypto markets is an inverse correlation, which means that as Bitcoin goes up, DeFi and other tokens tend to go down. Altcoins tend to go down. As altcoins go up, Bitcoin tends to go down, right? Now, this correlation holds true for Ethereum, right? And that's why this chart currently is so fascinating. Wait a second, did I do it the right way? ETH-BTC? I think I need to do, ETH-BTC. Yeah, that's the correct direction. Perfect. Now, right now, we can actually see the recent pump that's taken place in Ethereum, right? This recent pump that's taken place within Ethereum is showing us that now Ethereum is buying more Bitcoin, right? But what's really interesting is that whilst Ethereum is currently buying us more Bitcoin, and that's represented by the larger pump that we've had in Ethereum than Bitcoin, we actually haven't gone into or outside of any kind of range in this chart's correlation. If anything, we've just broken out of this wedge, right? Just broken out of this wedge. Now, if we're going to be looking at this in terms of a fundamental sense, right? What does this mean for the markets, right? Well, everyone's saying that, well, not everyone. A lot of people are saying that the correlation between Bitcoin and altcoins is starting to break down. And that was certainly true during our switch when we had our bearish return of the markets in the last month and a half, 2 months, right? We weren't seeing when Bitcoin went down, altcoins weren't going up, altcoins were just crashing more. Right? But what we've seen here is actually a little bit of a return to that correlation, right? Where are we? August, June, here it is. This is where stuff started to go haywire. It was around here. This is when we did the big drop, right? This drop, oh God, I just moved this. This drop is what held us, is what brought us within this wedge, right? Whilst the price between Ethereum and Bitcoin were moving within this wedge, our correlation between Ethereum and Bitcoin had broken down. Now we have moved out of this wedge, and I think that and this is my opinion, of course, I think that our motion out of this wedge on our spread chart is evidence that that bullish correlation is re-engaging. And I think we're going to start to see that bullish correlation re-engage. And we can already start to see some of that, by the way. Like today, Bitcoin had a bit of a down day. We've seen multiple coins that have gone a bit up today, right? Not greatly, but that's already a microcosm of that re-engagement of correlation, right? And if we've got that bull correlation that's re-engaged, i.e. we start to see as Bitcoin drops, alts go up, then as the alts go down, Bitcoin goes up, that means we're back in a bull because that's the bull correlation, right? So this motion here in my Ethereum Bitcoin spread has actually gotten me more excited than any price action in Ethereum Bitcoin. There we go. That's the last little bit I wanted to talk about.
Thank you so much. And what I'm going to do, one of the takeaways from me out of this conversation is to pay more attention to the ETH Bitcoin price charts and also the Bitcoin ETH price charts, because I think what you said made a lot of sense. Stephen, thank you so much. If you want to stop sharing.
Yeah, of course. No, thank you so much for having me there, Rich. It's been an absolute pleasure.
You're so welcome. Anybody who's watching, comments, questions in the description below. Steve will be back. We'll probably be recording this on Sundays or Monday mornings, UK time, and then I'll post it pretty much straight away as soon as I can. And of course, Stephen, you'll be back to talk about Vyfinance and Cardano. If you're interested in any of those, if you're interested in DeFi, if you're interested in Cardano, if you're interested in TA, because we'll also look at TA for other cryptocurrencies, then please do subscribe, follow me on my other platforms, comment, like, and between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Steve signing out. All the best. Bye-bye.
Thank you so much, guys.